Good morning, traders. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Quick disclaimer before we do begin: the information herein is only meant for educational and informative purposes only. None of it shall be construed as investment advice. Trading the financial markets do carry a degree of risk. But do not worry, I'm here to help you look at the markets the right way. In this session, we are going to look at a few interesting upcomings. What is going to happen in the markets? We are going to look at the United Kingdom. We do anticipate them to release their budgets today. We are going to look at also what is happening in the Asian session, specifically Australia. The inflation numbers has actually come out. Looking at New Zealand, also they have lowered their interest rate. That along with many more others. But I would want to start here with the bonuses and promotions. When you go to the bonus and promotion segment on our HFM platform, we do have the score and draw platform challenge currently ongoing, and then we do have the Shield 500. I would want us to start by
introducing the HFM Shield 500 account, a revolutionary new account specifically for new traders. Within your first 25 days, trade with a peace of mind knowing up to $500 in losses are fully covered as tradable funds. It is your chance to learn, practice, and grow with confidence. Ready to kickstart your trading journey? Sign up today and deposit within the first 10 days to get full access to this exclusive offer. Click below to get started, only with HFM.
Indeed, only with HFM. You have an opportunity to open the Shield 500 account. Whatever you do, deposit between $10 and $500. If you do incur any losses within the first 25 days, we are going to give you up to $500 in tradable funds only with HFM. You have maximum leverage of 1:400, trade all markets, no commissions, and it is available on all platforms. You will want to open your Shield 500 account, sign in minutes through the HF platform. Deposit once again between $10 and $500. Whatever losses you do incur, we are going to give it back to you in terms of tradable funds. We are currently in the second phase of the Rift Valley Pip Stop Tour. We are in Kericho. This is day 2 in Kericho at the Sunshine Hotel from 2 p.m. to 4 p.m. Then tomorrow we shall be in Eldoret, 27th and 28th of November at the KVD Auditorium, and we are going to conclude the Pip Stop Tour for Rift Valley with Kitale on the 29th and 30th of this month at the Aturukan Hotel. I usually do have physical classes at the Oval Office, Westlands, 5th floor of Ring Road. Currently ongoing. This is day number 3 of the seminar. We are also going to have another one starting 1st of December till 5th of December. You have an opportunity to register now. Book your slots. We usually have limited seats available. If you're not available physically, we do have online sessions. You do have an opportunity. Today I'm going to take you through Think Like a Trader. No, today is going to be market structure based trading techniques. It's going to start in the next 8 hours, 53 minutes and counting. You have an opportunity to register now. The webinar is going to be via Zoom. Once again, always we do have a lot in store for you, the traders. I would want to go over to the morning market call, starting with the economic calendar. This is whereby I usually start my day generating ideas from, and I would want to look at what happened in Australia region at exactly 3:30 a.m. my local time. This is Nairobi time. We did have CPI numbers, which is Consumer Price Index. This is the year-on-year release for the month of October compared to October of last year. Now, the previous number was 3.5% in terms of inflation. We were having a consensus of 3.6%, and the data actually came out at 3.8%, which means inflation in the Australia region is picking up. If I do click on the title here, then click on read official report, it's going to open a new tab whereby this is the official document that was released at that particular moment in time. As you can see, this is abs.gov.au. This is once again the official government release document that was released to the public at that particular moment in time. Now, looking at the key statistics, the CPI numbers did rise 3.5% in the 12 months to September. The largest contributors were to the annual movement were housing, which was up 5.6%, food and non-alcoholic beverage, which is up 3.1%, and alcohol and tobacco, which is up 5.5%. What's new this month? Looking at the releases, we want to look at the main features. If you do scroll down once again, the CPI did rise in the 12 months to August. The most volatile assets were excluded and include holiday travel, which rose 3.7% in the 12 months and a 3.4% rise in the 12 months to August. Now, the series excludes automotive fuel, fruits, vegetables, and holiday travel and accommodation. Usually, when inflationary numbers are released, there's usually the core CPI and the CPI itself. When you look at the graph here, we do have the core CPI, the monthly CPI. Now, this one excludes volatile items, which currently, as it stands, is at 3.7%, which is the news that we have seen there on the economic calendar. Now, looking at where we've come from, ever since June of 2025, inflation was down at 2.5%, but we're actually being seeing inflation move to the upper side. Now, if we look at the other graph, we do have the monthly CPI. Now, this references previous months. Looking at it, it is up 3.5%. And then looking at the annual trimmed, now this is the average, it is at 2.8%. Now, this is very important because central banks usually look at this information and ask themselves, okay, if inflation is in between the 2 and 3% region and we are seeing employment head in the right direction, they would want to lower interest rates. But if inflation does peak to the upper side, the central banks usually tend to increase inflation rates. Now, monthly CPI, once again, looking at the indicators, electricity did rise almost 33.9% in the 12 months to September. Looking at Australia, they do use a lot of resources. They do have a lot of resources and they do require a lot of energy to run and remove these. Let's say, for example, iron ore. They have massive reserves in iron ore. These equipment, these machineries, these industries do depend a lot on electricity. Now, looking at the rebates, they did start an initiative whereby last year they placed let's say for example in Queensland they had $1,000 state rebate, Western Australia had a $400 rebate, and Tasmania had a $250 rebate on electricity prices. Now this usually reduced the cost of prices for the consumers, but looking at it currently where it is, the program has just finished. As a result, households in those states have higher out-of-pocket electricity costs in September 2025 compared to September of 2024. This is going to have an effect. There is more pain into the pockets of the Australian economy. Going back to the economic calendar, that was inflation for the Australian region. The highlight of the day during Asian session was the Reserve Bank of New Zealand, whereby the previous number was 2.50%. We were having a forecast of the Reserve Bank of New Zealand lowering their interest rates, and we did see them actually lower interest rates to 2.25%. If I do click on the title here, then click on the read official report, it's going to open a new tab, and this is the official document that was released at that particular moment in time. It is quite a big document, and I want to take you through this entire piece. We are not going to read word by word, but the highlight is the overnight cash rate has been lowered to 2.25%. Now, usually when this document starts, looking at the contents here, there is a summary record of the meetings. There is the economic assessment and monetary policy outlook. The economic assessment basically looks at, okay, where are we currently as a country? Then the global economy and financial markets, what is happening to the economy currently at the moment? For us as traders, we want to focus more on the economic projections, what is going to happen in the near future. I would want to skip to page 39 of this document. The economic projections, what is the economic outlook? Where do they see the markets head to in the near future? Now, the chapter summarizes the central economic projections that the MPC considered when making their policy assessment. The projections were finalized on 20th of November 2025. Now, the most important thing here that we want to look at is where they're from. The economy has significantly spare capacity, but timely indicators do suggest that a recovery has begun. Okay, that's interesting. The next piece of information is the labor market has continued to weaken as unemployment rate has increased to 5.3% in September of 2025. Now, annual CPI has increased in 2025, accounted for by higher prices for tradable goods and services. Prices for New Zealand exports are elevated, but dairy prices have begun to decrease. They assume that elevated global uncertainty contributed to the decrease in business investment in mid of 2025. The most important piece here that I want us to look at, we project the OCR to remain near its current level over the next year. That is the most important piece of information in this document. The Reserve Bank of New Zealand are going to hold interest rates over the next year where it is currently at the moment. Now, they do assume the OCR is sufficiently stimulatory to ensure a recovery in the output gap, while annual CPI inflation to converge to the 2% target midpoint. Our suite of indicators suggests that the long-term nominal neutral OCR is about 3%, with a range of uncertainty around the value. However, the short-term inflation expectations and current annual CPI inflation above 2%, the short-term nominal OCR is likely higher than 3%. In August of 2024, we will support an increase in demand over time. We are looking at the Reserve Bank of New Zealand. Yes, they did lower interest rates today, but these interest rates are going to be held there for the entirety of 2026. If a central bank holds interest rates, we do anticipate the currency to be stronger. And we are going to look into the charts of New Zealand dollar against United States dollar, what happened today and what could possibly happen in the near future. During New York session at exactly in the next 5 hours, 16 minutes at exactly 3:30 p.m. local Nairobi time, we do anticipate budget report for the British region. Now, there are speculations of a budget gap of nearly 20 to 30 billion pounds, and this has to be accounted for, and this money has to go back into the economy. Now, the Chancellor, her name is Rachel Reeves, is due to release the budget. And it is a decisive moment for the fate of Keir Starmer's government. The Chancellor will say she's taking the fair and necessary choices to shore up the economy as she raises billions of pounds worth of taxes to help offset lower than expected growth forecasts. Now, looking at this information, if there is a budget gap, the government would want to offer more yields, and I would want us to switch over to the charts. But before we do, the British pound today is going to be very active as a result of this information. There are certain things that we do anticipate for them to bring out. Let's say, for example, they are anticipated to announce a rise in the minimum wage, bringing the first rail fares freeze in over 30 years, cut green levies on energy bills, scrap the controversial two-child benefit cap to help improve living standards. Now, despite the budget leaks, it is still unclear where billions of pounds worth of tax rises could fall, raising the prospect of announcements unraveling in the days after the budget, which could further dent Labour's standing with the markets and the public. If there is a budget gap, the government would want to offer more in terms of treasuries and bonds. We are going to look at UK gilts. What does this have in store? And all of this is available to us as traders. Once again, we do have the Shield 500 account. You have an opportunity to trade live market conditions risk-free. Not only that, we do have the most recent promotion that we have launched, which is indeed, you have an opportunity to join the Score and Row Challenge. We are going to give away a brand new BMW 4 Series. Not only that, we are going to have a UK Premier League trip for two, all expenses catered for, flights, accommodations, match tickets. 4 winners are going to be gifted a 55-inch TV. 20 winners are going to be gifted official EPL jerseys of their teams, and 60 traders are going to be credited $200 each into their account. We are going to have the next monthly lucky draws in the next 4 days, 14 hours and counting. How do you join? You go over to the HFM login under the promotion segment, join the score and draw, trade and earn points, allocate them across different draws for exclusive prizes. I would want to switch over to the charts, and I would want you to engage with me. Which are some of the assets that you want me to look into? Mr. Kera, welcome to the stream. I would want to start with the New Zealand dollar against US dollar. NZD-USD. Here it is. As you can see, prices of NZD-USD did move quite aggressively to the upper side ever since Asian session did begin today. From the lows that was created to where prices are currently at the moment, this is more than 1.26% of its total value, currently trading at 0.56834. This is almost 70 pips to the upper side. And this is the result of the data that was released, whereby looking at this information, if Reserve Bank of New Zealand are going to hold interest rates, yes, they did lower interest rates today, but if they are going to hold it for the entire of 2026, it means that it's going to attract more capital into the economy. Hence, the New Zealand dollar is anticipated to be stronger, and we are seeing already buyers into the markets. If the dollar is going to lower interest rates, which is going to be in the next 14 days and counting, if I can just pull up my Fed Watch tool. Yesterday, we did have PPI numbers coming in for the United States dollar, and we did see PPI numbers coming in lesser than anticipated, meaning inflation in the United States of America is actually cooling down, which is going to prompt the government, the Fed Reserve, essentially to lower interest rates in the near future, which is going to be the final meeting of the year, which is going to be in December. Let's wait for the tab to load up. If you do have any inquiries, kindly put it in the chat section. I will be glad to answer you. It's going to be in the next 14 days, 11 hours and counting. Looking at the statistics currently at the moment as it stands, I do believe it's more than 85% probability that we might see interest rates being taken down in the next meeting. Beautiful. It's currently at 82.9% chance that we'll have interest rates being taken further down to 350 to 375 basis points. What this means is that we are anticipating a weaker dollar and a stronger other currencies. In this particular case, we are looking at NZD. I would anticipate prices of NZD USD to continue moving further to the upper side. Potentially, if we do break and close above this region here, then this could be the start of a change of character, whereby the markets was trending to the downside, forming lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. But as it stands, we do have this region, and I would want to identify it. We do have a region of support forming around this particular region. The markets have failed to break those lows, and we have had signs of buyers coming into the markets. I would want to pull a Fibonacci tool from the most recent swing low to the most recent swing high. If I do see prices coming back into the golden retracement region, which coincides with the 200 period moving average, I would consider looking at potentially prices of USD, New Zealand dollar against US dollar to move further to the upper side. I will want to look at a short-term retracement, potentially prices coming back to the opening price and the highs that was formed during yesterday's session for, once again, a further continuation to the upper side. Looking at gold, gold has been quite decent of late. We were consolidating for quite some time, but come Friday evening, we did have news that there was a split in the Fed Reserve. Some members were looking at cutting interest rates by the name Williams. Williams did want the Fed Reserve, was opting for the Fed Reserve to cut interest rates in the next meeting, while we were having split decisions from other members whereby they wanted to hold interest rates where it was currently at the moment. Now, the markets went with cutting interest rates, and as we have seen with the Fed Watch tool, there's a probability, there's a 82.9% chance we might have interest rates being cut in the next 14 days and counting. If that does happen, and I'm looking at XAU USD, I do anticipate the dollar to be weaker. As a result, gold could potentially be stronger. Looking at price action currently at the moment as it stands, we did break the highs that was formed back on 19th of November. Prices entered a bit of consolidation. These low failed to break the most recent low, signifying that buyers were potentially coming into the markets. And ever since Monday did open, we did see prices rally to the upper side. Currently, as it stands, from the lows that was made during Asian session on Monday to currently it is 2.75% to the upper side. This is more than 1,111 pips to the upper side. I do have a Fibonacci. I would anticipate prices to come back down to this region, potentially retesting the 41.50 region where it is a psychological level. If you do get signs of buyers in London session in the next 37 minutes to go, I would consider looking at more net long opportunities. If at all prices do breaks the highs that was formed around that region, I would want to adjust my Fibonacci level, which coincides with 41.15. If prices do come to this region, once again, I would consider looking at more net long opportunities on the precious metal. Silver is not left behind, where it has just broken the highs that was the relatively equal highs that was made yesterday, and we are trading well above that region, signaling that buyers are still in control over the markets. Interesting thing to note about silver already is that the 200 period moving average has crossed over, gone below the 50 period moving average, is now in between the 200 MA and price action, signaling that yes, indeed, buyers are in control over these markets. I would consider looking at net long opportunities, potentially for prices reaching back to 53.5 could be a likely target in the near future. Looking at XAU Euro, we do anticipate President Lagarde releasing her speech today. And the most important thing to note is that once again, we have a crossover on the 200 period moving average going below prices. The 50 is now in between price action, and prices are trading well above the 2 period moving averages. I would consider looking at more net long opportunities, considering that the euro is anticipated to be weaker, and this could potentially move prices further to the upper side. We have been seeing political instability in France. Today is going to be government 10-year auction. If I can just pull up my economic calendar here, we are going to have the 10-year auction for the bonds for Germany in the next 3 hours, 6 minutes. Quite interesting. Currently, at the moment, as it stands, the 10-year bonds are offering 2.62%. We would want to see how investors would perceive this information. Are they going to be comfortable in what is happening? Currently, at the moment, are investors going to give Germany a loan in terms of bonds? How are the markets going to react to this information? Now, going back to XAU Euro, I would anticipate prices to continue moving further to the upper side. I would want to switch gears into stocks, indices to be exact, starting with S&P 500. Yesterday, while we were doing the analysis, we had identified that if the Fed Reserve do cut interest rates, it means it's good for equities, because these companies do service a lot of debt, and if they do lower interest rates, it means they are going to pay off these loans at a cheaper price, which hence it means they are going to make much more profits. We are seeing the markets react to this information positively ever since Friday. The markets did push to the upper side. This was Thursday during NFP, whereby the NFP numbers did come out slightly negative. We did see unemployment tick to the upper side to 4.4%. The markets did react negatively, but we did have a region of support forming on Friday evening, and the markets reacted positively during New York session, whereby we had signs of buyers coming into the markets after the speech from Williams, who's a member and the CEO of the Fed in New York, to be exact, where Monday opened to the upper side. Yesterday, we did consolidate for quite some time during Asian session, which is common for the S&P 500. Then during New York session, we had signs of buyers coming into the markets. If you look at price action currently at the moment, buyers are in control over these markets. We just had one red candle for the past, if I can put it into perspective, for the past 16 hours, we have had only one bearish candle, and it was very small in size, meaning buyers are in control over these markets. I would anticipate prices to continue moving further to the upper side, considering that the 200 period moving average has gone below. The 50 is now in between, and price action is well above the 50 period moving average, signaling that yes, indeed, buyers are in control. Stana, thank you for the follow. Wangai, welcome. to the stream. I would want to look at the Nasdaq, which is the US 100, positively correlated, whereby prices are moving further to the upper side, just as the S&P 500. The Dow Jones Industrial Average also, prices are really pushing to the upper side, whereby we are having signs of buyers into the markets. Currently at the moment, the S&P 500 equities in the United States are firing on all cylinders. Nvidia is not left behind, whereby yesterday we did see the markets gap to the downside, and we did have signs of sellers into the market. This was when Nvidia did release their earnings, which came out better than anticipated at $57 billion on the third quarter of this year. They do anticipate more growth in the near future. We did see signs of sellers into the market, but currently at the moment, as it stands, prices are retracing on the gap that was formed on yesterday's price. Now, Nvidia is going to open currently at the moment, as you can see, the time it is closed. Nvidia do trade after New York does open. I would want to follow, keep a keen eye on the tech giant, what is going to happen after the bell does ring during New York session today. I would want to look at USD JPY, which is quite interesting. This is an asset that I want to pay close attention from now till December. This is something that as traders, and I do believe it's very critical for us to look at the Japanese yen right now at the moment. Why? Because in the near future, in the next 14 days, we do anticipate the Fed Reserve to cut interest rates. Whereas early December, I do believe it's going to be either the first or the second week of December. I'll look at the economic calendar. We do anticipate Bank of Japan to increase interest rates. If they do increase interest rates, it means they are strengthening the yen, essentially. They are attracting more capital into the country. We did look at Friday. Bank of Japan also did approve a stimulus package of almost $135 billion. This is more than 42 trillion yen being put into the pockets of people. If I can just go into some of the particulars, children below 10 years of age are going to be credited $135 per child. This is the initiatives that Bank of Japan is having. What does this mean for me as a trader here in Kenya? It does mean I anticipate prices of the yen to strengthen against the dollar. Looking at price action currently at the moment, we were making high highs, high lows, high highs, high lows, but it reached this particular moment in time whereby prices tapped into 157.866. This was back on 20th of November, less than 6 days ago. Then we had signs of sellers coming into the market. This market broke the most recent structure that we are seeing here. Prices went back up from the high, but this high failed to break the most recent high. Then prices continued moving further down, breaking the most recent low to form a new lower low. The trend could be changing currently at the moment as it stands, whereby prices are making lower lows, lower highs. This is the most recent lower low. If I do have price action forming, I would want to pull a Fibonacci from this low to this high. Currently at the moment as it stands, prices is in between the 50 and the 61.8% on the Fibonacci level. If we do get signs of sellers coming into the markets here, I would consider looking at shorting opportunities, potentially for prices heading back down. There's a region of interest I would want to pay attention to, which is 153.419. The last time prices was here was earlier this month, whereby we did see prices gap to the upper side as a result of Prime Minister Takaichi being sworn in. Once again, if we do have signs of sellers coming into the market between the 61 and the 50% region, I would consider looking at selling opportunities. Looking at the moving average currently at the moment, the 50 period has just gone above price. If the 200, if we do have a crossover on the moving averages in the near future, then this will cement my thesis of looking at selling opportunities on USD JPY in the near future. I would want to look at Nikkei 225. I do anticipate Nikkei 225 to move to the upper side. If the Japanese yen is going to be stronger, it means that the Nikkei 225 also is expected to be stronger. Price action is similar at the moment. If we do break and close above this region, I would look into more long opportunities on Nikkei 225, potentially prices coming back to 49,979, which is just shy of the 50,000 mark on the Nikkei 225, which is a likely target I would want to pay attention to. Considering today is Wednesday, the weekly candle has today, tomorrow, and Friday for it to trade, so that we go to the close of the monthly candle. Quite interesting, noting how this is going to play out. While on the other hand, if you do break the laws, that we do have a region of support around 48,269. If you do close below this region, I would consider looking at shorting opportunities on the Nikkei 225. I would want to look at GBP USD, anything related to the British pound currently at the moment as it stands. We do anticipate a budget gap leak. We do have less than 28 minutes to London Open. Once again, we are anticipating a budget deficit of nearly 20 to 30 billion pounds. And the most important thing for us as traders that we want to identify is that where is this money going to come from? If there is a deficit in the budget currently, once again, what would happen is that the UK would offer bonds. In this particular case, we are looking at UK gilts. If there's a deficit, the government would want to raise money, pool resources. I would want to reference, for example, Kenya. Elkington, morning market call is bright. Thank you, Toxic Skype. Thank you. It is a blessing. It is a blessing. I always feel blessed, and such kind words, it warms my heart to continue doing this. Let's impact the generations to come in the right way. This information is there for us, available. HFM is doing a really good job in terms of making this information available to you, the traders. We would want you to make informed decisions. I would also want you to make informed decisions in the markets. Now, looking at gilts once again, I would want to look at Kenya, for example. We are supposed to expand the standard gauge railway up to Malaba, but we were looking at loans from China. They did refuse the loans, and also the United States. So what the government did was to set up a bond whereby they want to pool resources to facilitate the infrastructure being built. Now, what happens is that bonds are usually you investors giving the government a loan, and then the government gives you interest rates based on the agreement that you did have, and then at the end of the specified time, they are going to give you back the face value. Now, if UK have a budget deficit, what they would want to do is raise money. For them to attract investors, they would want to offer more in terms of yields. If currently at the moment the UK gilts, if we can just look at it from a daily perspective, ever since the year did begin, the UK gilts have been trading around 92. Looking at the daily perspective on the 1 hour time frame, for them to attract investors, they would want to offer more in terms of interest rates. Meaning UK gilts, I do anticipate it to move further to the upper side if there's a budget deficit gap that we are going to see in the near future. Already there are leaks of 20 to 30 billion, but we want to listen to the Chancellor. What does she have to say? Yes, there's a budget gap, but how is the government going to make up for that money? There's a high likelihood they are going to offer bonds. And if they are going to offer bonds, it means that they are going to increase the yields, which means prices of UK gilts could potentially move further to the upper side. Christina, welcome to the stream. Oburu, welcome to the stream. That's going to be it for me for the morning market call. Once again, risk management is going to be very important at this particular moment in time. Moving over to December, on the 16th of December, I do believe so, we are going to have NFP, 2 NFPs. We are going to have NFP for October and November being released. Yeah, on October and November being released. Most of the times we used to see December being quite slow, historically speaking, but that's about to change. There is a high possibility this December is going to be very volatile. For us as traders, that's the most important thing. Devi 254, we shall reach out to you. Don't worry. We shall reach out to you about your case. Before the end of the day, we are going to reach out to you. Okay, don't worry. Good things do take time. Okay, it's always in the first 25 days of trading. Okay, the terms and conditions is very important. Whenever you do open any account, whenever you go through, let's say for example the Shield 500 account, the terms and conditions are usually very, very important. Always go through them. They usually come to your email. Kindly go through them, but we shall reach out to you. Don't worry. Sorry for you. your disappointment in us, Mr. Devi, but we are going to look into that in just a few moments' time. But once again, we are going to have the Shield 500, whereby this money will come back to you. Don't worry about it. We do have the score and draw challenge. You have an opportunity to trade with us, get a chance to win a brand new BMW 4 Series, a UK Premier League trip for two, 4 smart TVs is going to go home to you, 20 official football jerseys, and $200 will be credited to 60 lucky traders. That's going to be it for me. Once again, Mujinya Mujina 4, how does one handle those big price gaps on the indices and some currency markets? Okay, that's a very beautiful question. How do you handle such gaps? Now, gaps usually happen whenever there is most of the times it's usually during the weekends when the market closes on Friday, when Forex closes on Friday. There's still business occurring on Saturday and Sunday. When the markets open on Monday, there's usually a price difference between Friday's closing price and Monday's opening price. Now, this could be quite impactful. This is UK gilts, but I would want to look at an asset like, let's say, for example, USD JPY. We did see gap here. This was Friday's closing price. This was 7th of November, and then this was 10th of November. Most of the times it usually does happen when there's a lot of news releases. Now, how can you manage in currencies? If you cannot handle the price gaps, the potential price gaps over the weekend, it's always advised to manage risk before the markets do close on Friday. Ask yourself, are you willing to let the position run over the weekend? If the markets do gap up on Monday, could you sustain the drawdown? So it's a question of what are you going to do before the market does close. So that's what usually happens on the currency pairs. That's a very beautiful question from Mujinya 4. Looking at USD JPY, currently at the moment, we are starting to reject the 50 and the 61.8 region. I would consider looking at this currency chart for now. USD JPY is going to, I really have my eyes on dollar yen up until I'm going to die with it till 2025 does end. That's going to be it for me. Take care of yourselves. I shall see you when you see me next.